Now, the second one, like we talked about, is diversification. And we all know the saying, don't put all your eggs in one basket. Yes, of course. So that's what it is. By having your investment diversified, you're spreading the investment across different assets, whether it's stocks or bonds, real estate, local markets, international markets. So you're not just relying on one type of investment. And the reason why this works is because different investments behave differently under various market conditions. Some investments do really, really well when there's lots of volatility. Some do better when there's a lot of stability and there's not a lot going on. So they balance each other out over that period of time. You're not having to take on a ton of extra risk. So by doing that, by you reducing your risk, you can still get great returns without having to sacrifice. So you can still get great returns without having to make any sacrifices on that, just by having diversified, owning pieces of great companies, and spreading that across different asset classes or different companies, different strategies. So the way I look at it and what I encourage people, because again, it's a great industry right now as well. However, you look back, I know some people that were huge technology investors. They love investing in technology stocks, and they put all their money in these tech companies. And when the market's booming, going great, that's awesome. You're making a bunch of money. You're doing really, really well. But if you look back to 2000 to 2002, tech companies dropped 75% over what was known as the dot-com crash. So if you had all of your investments in there, you wrote all the up, but you also wrote all the down. So being able to know when to be okay, certain markets or certain areas makes a big difference. A big piece I like to have is I like investing in mutual funds. I like investing having professional money managers looking after the investments, making the buying and trading and allocating the dollars. They're not riding the market, whatever it's doing, just being subject to that. They're able to course correct and pivot, invest in different industries. These guys, that's what their job is. So I appreciate, I like working with those kinds of things, but there's lots of different options. You can do your own investing. You can use ETFs or index funds, but you can own different asset classes, stocks, bonds, real estate, all these different tools.